Welcome back to another episode of Buy Smart, Live Smart, Sell Smart. Today we're discussing what a monthly mortgage payment is. For those of you guys who rent, that's called your rent every month. If you own your home, you have a monthly mortgage payment, which I will break down and detail it so that you can explain it to somebody else. PITI is what I want you guys to remember. Principal, interest, taxes, insurance. You will always have these four parts unless you buy your home in cash or you, I guess, over the years, 10, 15, 30 years, whatever it is, paid off the money that you borrowed in order to purchase your home. Your principal is the amount of money borrowed. So if you bought it in cash, you didn't borrow any money, you wouldn't have a principal. Your interest is the cost to borrow your principal amount, which is the money borrowed. If you bought it in cash, you didn't borrow in it, so you don't have to have a cost to borrow. Make sense? But for the majority of us, we have all four parts, the P, the I, the T, and the I. Let's break it down. Starting with the two easiest ones, it's insurance, which everyone needs depending on what region of the country you live in. Flood insurance, earthquake insurance, fire, or tornado. The next one is taxes. Death and taxes, we've all heard it. You need to pay it. Some places are higher than others. California, high taxes. Let's not talk about it. Last, the first two, which are the biggest portions of your monthly mortgage payment. In order for me to be able to explain what principal and interest looks like, I have to take you down here. For the sake of this example, I used an easy number of $100,000. It's even, it's low, just for this example, let's go with 100,000. So this home cost $100,000. This particular buyer saved up $5,000 as a down payment. That's 5% down on a $100,000 home. So if you took the $100,000 and then you subtracted $5,000 from that, you end up with what is called the principal amount. The principal amount is $95,000 because you borrowed $95,000 from a lender/bank in order to buy this home. So the principal amount is the money borrowed, the amount of money borrowed total, at the cost to borrow that amount is 3.125. So let's recap really quick. The home is $100,000. You have a $5,000 down payment, which means the lender is giving you $95,000. So that's your principal amount. That's the total amount borrowed at 3.125. That's the price or the cost to borrow this amount. So the principal and the interest is going to be spread across a 30-year fixed mortgage. This is the most common type of loan that most homeowners will get. I'm sure some of you guys have noticed, what's that 3.668 number doing there? That's the APR. The reason why that is higher than the interest rate here is because this APR is the interest rate plus the other charges and other fees involved in originating or creating the loan in the first place. So I'm sure some of you guys have noticed by now that I left out PMI. Please go subscribe and click on the video PMI. I'm not sure what I'm going to title it because I actually just made it today and I haven't finished editing, but it's going to have PMI in it. It's the private mortgage insurance. This amount is relatively low. However, for a regular priced home in the Central Valley, it's going to be closer to $300,000 to $350,000, and that's going to be in between $100 to $200. We have to pay this private mortgage insurance until we own at least 20% of our home. Now, for this example, if the home costs $100,000, we have to have paid back to the lender $20,000. Unless we have $20,000 into our home, we will have to have PMI every single month. This money that you pay in PMI does not benefit you at all. It's a protection / insurance built in for the lenders. So 20% is what many people love to get as close to, because the faster you get to 20% equity / ownership, the faster you get rid of PMI and start making payments that really matter. I hope that helped. If you guys have any questions, please don't hesitate to reach out to me. In the meantime, remember, share knowledge, share network, and share compassion.
I recommend PITI.
We recommend PITI.